on 212. Buy, sell, buy, sell.
Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future.
Hey, Damas.
Is something that's
Hey,
in our
Yanar.
DNA.
Good
How are
morning. Or
Very
good
good. How you
afternoon.
doing, guys?
Just available for a few.
Hello, Mike.
Great.
Hello.
Traders.
How are you guys
see
doing?
Things differently.
Yeah, not
Paying
bad.
attention to every
All
small
right.
Money
detail
yesterday.
that
Yes.
will maybe go unnoticed by the common eye.
Still running. I added
Or by
a long
the
position
edge of our playground.
like 10 minutes ago.
With
20
a
minutes ago,
constant
sorry.
strive for glory.
Same.
Seeking for a new tomorrow.
I'm in the long at 2364.
Take back control of your investments.
Yeah, somewhere. Yeah, it's exactly my entry.
Yeah.
So I entered as well at 2364 and expecting a bit bullish continuation, but again, the outcome of the hearing is going to determine the direction. And I want to show you before we move on, start with the technicalities, because there's not much to talk about right now. We don't know the outcome of the hearing. Price dipped in to this. Many people call it liquidity zone, but basically it was the last consolidation before the push to the upside. And now price is really massaging the daily and the weekly pivots, which is not ideal because, you know, if it stays below the pivots, it's a clear sell. If it breaks above, then it's a clear buy. The market structure looks like a head and shoulders, so we can't ignore these, you know, simple patterns because they do work sometimes, but I wouldn't rely too much on them. Now, The hearing, if you have a link, please send it, because I haven't looked into it. When the hearing starts, if Powell gives out any new information, or if he is speaking very highly about the good work they've done, so touch base on things like inflation is cooling, labor market is weakening, etc., etc. Everything that points into the direction that we're heading into, deflationary environment, unemployment rising, yields are going a bit lower, then chances are high that price is going to revisit 2400 today. On the contrary, if Powell is going to hit the same cautious tone that he's been echoing for the last 10 months or 18 months, the question then is whether the market is going to listen to Powell, which the market clearly ignores Powell for the last few months, or they're going to listen to Powell and they're going to sell off, because the sell-off is on the table as well. But I think the market sentiment right now is more on the bullish side. Why am I saying this? The reason for that is because presidential elections are around the corner, a few months away. And the Fed was clear about it, that they're going to cut once this year. So from 3 to 4, we went to 1, and half of the year is already gone. Usually they don't interfere with the election, but they have to give something to the market, because so far they've only been talking for a year. And there has been no rate increase, no rate cut for a year now. And that is the reason why I think the market is ignoring the hawkish speeches or the hawkish commentary, and they're really looking forward for a rate cut, because everything is pointing to that direction. Yes, we have mixed data, but I think the market sentiment right now is quite hawkish. So looking at the open positions, I have positions from last week, which was every single day profit, profit, profit. Some, stop loss hits, but who cares about those? Yesterday entered another long position after price moved back into the liquidity zone I showed you. And that one is currently running in 94 pips. I added another long position 20 minutes ago that's running in 24 pips. And I'm still expecting price to break 2400, but in order to that to happen, Powell needs to either give out new information about the rate cut, it's not the rate cut, the rate cut that they're going to pull this year, or he has to be quite neutral and the market is going to take it as a dovish stance. Any questions?
No, that makes sense. So you think that the potential for 2400 is today, actually, huh? If I understood you correctly?
Yes, if everything goes well as I plan. But sometimes, and I highlighted multiple times that the Senate hearings are full with political agenda. Especially, it is going to be worse today because of the presidential election soon. But who knows? These are quite tricky to trade. We don't know what is going to be asked. Many times the last two Senate hearings, they touch base on the minorities and the how Powell's policies or the Federal Reserve policies are targeting minorities in the U.S., which is complete BS, because inflation and high interest rate, it's affecting everyone else. It's not just the minorities. But anyway, sometimes the talks and the questions can be completely irrelevant. So I'm hoping that today some wise man or women, congresswomen and congressmen, are going to ask some good questions.
Yeah. Okay. And it looks like price is hitting that weekly pivot and kind of bouncing off of it here.
It is indeed. It is just massaging it.
Yeah, but it wants to push through.
Yeah, we like a bit of push, don't we?
All right. Oh yeah, you haven't played your Habibi song for a while.
No. There you go. Okay, Sean just posted the link. Thank you so much, Shark. So it's going to be in Yahoo Finance. Okay, I'm gonna head to my browser and preload the link or the stream. Oh, we are pushing through, ladies and gentlemen.
Yeah, pushing through.
Push it hard. Okay, we still have, 4 minutes left. This is going to be the event. Let me give a like to Yahoo Finance. 1.22 million subscribers. That is insane. Okay.
Wow.
Still struggling with the pivots, but so far it's nice profits. Make sure that, be careful, because these events are difficult to trade. Sometimes they go in our favor when we have a clear idea about what is going to be said. But in order for that, you need to have a clear understanding about, monetary policy. You must have heard 2 or 3 previous hearings or, press conferences. Always have a plan. That's the best.
Yeah, if this gets up a little further, I'll put a trailing stop on that.
Yeah, my stop loss is... The entry is the same as yours. My stop loss is 48 pips, so just below that candle, which is quite tight if you talk about gold, because, sometimes gold, you can use 70, 80 or 100 pips, because I don't always trade with, heavy lots. And gold has... many times 80 or 100 zones, top to bottom, bottom to top. And the other stop loss is a little bit lower, but the way I calculate the stop loss, I look at the potential loss. I don't care really about how many pips. That's why, sometimes I use 80 pip stop loss. And the hearing has just started. Sorry, let me just switch to... Oh no, a few minutes left. So I look at when I set the stop loss, I look at, what is the potential loss? How much I'm going to lose if it hits stop loss? I like to leave it as wide as possible, but sometimes, it isn't reasonable to have. But anyways, personal preference. I set my stop loss so the loss is below £1,000.
Yeah, that makes sense. I have a pending hedge at 2357.75. So if it drops down there, I'll hedge the trade. But now that it's past the pivots a bit, I'll probably just put a trailing stop on this.
It's pushing nicely.
Yeah.
Hello, Thomas. Please, the open trade position counter. What's the name of the indicator?
If you look on the screen, bottom left, where I have my account. If you look at this one, blue digits, FX open trades, MT5.
Okay.
This one. You can go to the meta market and you can add it. It's free. It's a brilliant tool. And also add the candle timer. It helps a lot.
Okay, thank you.
You're very welcome, my friend.
Blue digit FX open trade. You're on MT5, right? I wonder if that exists for MT4.
Not sure, but some alternative. There are loads of things like this, loads of tools like this. All right, we have a hearing. Should start by now. I'm going to hit the refresh button.
Usually for these hearings, he reads some opening remarks. And a lot of the times the press has those opening remarks beforehand. And so it might, whoa, a little bit of a push here.
Ross Starr posted in the general chat. I was surprised because I didn't know that they're recording it prior, but they may be. I think it gives, the reason for that, it gives some time for the Senate to read and understand and come up with some questions.
Yeah.
Okay, CNBC is already live. Yahoo Finance isn't. So maybe I'm gonna go with CNBC. Okay.
I don't like this coming back down into the range.
You know, sales are on the table as well.
Yeah.
It's normal. Shauz Yormatov, as I told you guys. Oh, I love that. It comes down to 2363 before flight to 2400. Okay, no need to send your ID. I told you, as forecasted.
Like Sam did.
Who?
Was he Sam who was saying sell but was going up?
Oh yeah. But usually when these people are wrong, they always disappear after.
True.
I love that. There's how many gurus out there? They put a shitty trading view chart. Doesn't even show MetaTrader. Then when it hits stop loss, they just carry on, talking about something else like nothing happened.
Yeah, I've seen that.
Indeed.
Look at, like in the zoo. One in the middle, everyone is taking photos and walking around. And this, I'm not sure if many people know, or many people know. I'm pretty sure that this is actually a job review of jpow, because he has a responsibility to give account about what he did, what he achieved, because he was elected, nominated by the government. Photo session.
Yeah, nominated by the president for, I think, 6-year term, right? So he could resign before then, or the president could ask for his
Housing and Urban Affairs will
I'll
come
shut
to
up.
order.
Someone
Welcome, Jerome
downed-
Powell. Nice to have you back. Good to have you
Someone
first.
downed a
this
few
time
bottles of
year.
whiskey in his life.
Ohioans know, Americans know that our economy fundamentally is not a fair playing field. Instead, we have a David and Goliath economy where the largest corporations use their power to funnel all. Ohioans know, Americans know that our economy fundamentally. Instead, we have a David and Goliath economy where the largest corporations use their power to funnel all the gains of the
Okay.
economy to the
The
top.
hearing has started.
Aided and abetted by too many people in this room. Corporations squeeze every last penny from Americans' pocketbooks and workers' paychecks. They don't even try to hide it anymore. The biggest corporations are charging more for less. Americans are frustrated. No, actually, Americans are pissed off. They have fewer and fewer choices. Those choices cost more and more. Keeping prices down is part of the Fed's mandate, but as many of us have made clear, the Fed's main tool to combat inflation, raising interest rates, does nothing to address the biggest causes of rising prices right now.
I have my
Corporate
last
greed,
position that
keeping
stopped
rates
out while the opening speeches started. Now price is pushing down. So I'm very curious about what's going to happen.
continue to go up. It's no surprise that since the Fed began raising rates, the amount of income families need to qualify for a mortgage has nearly doubled. Homeownership has long been a bedrock of our middle class, but today fewer and fewer middle class families can afford to buy a home. Higher interest rates are making our country's housing supply shortage worse, not better. We need more housing construction of all types. Higher rates lead to the opposite, and particularly make it harder for multifamily construction to work financially. Higher interest rates make borrowing more expensive for working families, whether it's for a mortgage or a car or anything else. Most people don't have the luxury of paying for everything in cash. And for the millions of Americans feeling their budgets stretched by higher prices, taking on credit card debt to pay for groceries and other essentials has become an option of last resort. But as more people struggle to pay down their debts, credit card interest rates are reaching all-time highs. Last month, Director Chopra testified in front of this committee in explicit.
Now, the things that he's talking about are absolutely devastating, like the financial difficulties families have. But this is actually good for the Fed because, you know, the worse the economy is, the less money is circulating.
Every month that the Fed keeps rates high, Mr. Chair, it costs Americans money by making it
I entered another buy. Let me just show you my MetaTrader screen while he's talking. We want Power to speak, not the chairman, Mr. Brown. So I entered into another long position. And just waiting for Powell, what he's going to say, because he's going to determine the direction of gold. So this is the last position I entered. The stop loss is set at, where is the stop loss? So somewhere around 23.55, or wherever you feel confident and comfortable. And now back to the speech. Can everyone hear the speech?
This price cap
Yes.
on life-saving drugs for all Americans. And why my colleagues and I on this committee are working, it's why we're working to lower housing costs for more Americans. The Fed also continues its work to keep the banking system stable and ensure consumers' money is safe. Last year, the Fed and other bank regulators issued a proposal to update bank capital requirements, strong capital standards, and you've heard in this committee overwhelming support for strong capital standards. They're critical for the economy. It's our way of making sure that if Wall Street bets go poorly, which they often do, investors, executives, and shareholders should pay for it, not taxpayers. The biggest banks have spent obscene amounts of money attacking this Fed proposal. But you, the Fed, don't work for big banks. You work for the American people. Your concern should be developing capital rules that protect Americans' money, not protect bank CEOs' stock portfolios. The Fed needs to look past these shameless lobbying efforts and finalize a rule in the best interest of taxpayers. Another dangerous piece of the Wall Street business model that makes our banking system less safe is incentive-based compensation.
Banking regulation is a serious thing because in 2008 financial crisis was actually an unfold of 2 decades unregulating the banking and finance industry. So it is a serious part that the Senate is looking into because the Fed is, they're regulating the banking sector, and there was a massive deregulation from 70s to 2000, and the result was actually the 2008 financial crisis, just for your information.
Required effort as soon as possible. The Fed also has the important job of reviewing mergers and acquisitions between and among banks. Over the last several decades, we've seen the largest banks grow into massive, literally trillion-dollar companies, while thousands of small banks in rural communities in Northwest and Southeast Ohio, in small towns in those areas, and all across America have disappeared. Consumers have lost trusted local banks.
So while Mr. Brown is giving his opening speech, the price has been bounced back off from the daily and the weekly pivot, and now back into the consolidation zone. So as I forecasted, I hate to say this, but as I forecasted, we can expect some sideways movement, and the range is quite wide, 23.53 all the way to 23.67. So conservative traders, if you see a breakout to either direction, to the upside, and then a retest, then it's going to hit 2400. But there's also a downside because we don't know what is going to be said during or throughout the meeting. It could break to the downside and melt down all the way to 23.27. But I'm on the bullish side because of the market sentiment. Both directions are very valid. So whether you sell or buy, you don't need to echo it to everyone that, buy now, sell now, because we don't know what's going to happen. The testimony is going to define the direction.
Regulators like the Fed have the crucial job of guarding against mergers that reduce or eliminate competition and lead to bank closures or layoffs. I recently sent comment letters to the OCC and the FDIC on their current efforts. I expect the Fed to take the proper steps to ensure that its merger review process is robust and that it protects consumers and communities. Finally, Mr. Chair, you must ensure the Fed has high ethical standards. Fed officials should never again be able to profit from their positions by using confidential plans about Fed monetary policy and emergency programs to pad their investment portfolios. The board's latest update to its trading rules is simply not good enough. It still fails to establish the clear penalties needed for Federal Reserve officials who make investments in violation of the public trust. A rule with no consequences is really not much of a rule at all. The American people need to be able to trust that the Federal Reserve works for them in a time of deep cynicism that people have about the federal government overall. The American people need to know that officials aren't abusing their positions for personal gain. As chair, you have an important role to play to make sure our economy works for everyone, not just for Wall Street. The Fed's regional banks must do their part to hear from people and other stakeholders in their 12 districts to understand their needs. I look forward to hearing today how the Fed will balance its dual mandate, how it will protect Americans' money, how it will foster an economy that upholds the dignity of work. Senator Scott.
So Mr. Brown said that the Senate hearing is going to touch base on multiple things: regulation, dual mandate. Hopefully, our interest is the monetary policy. So expect price to wiggle within that 100 pip range. Don't jump into buys and sells on user scalping, and don't use big lots, because Senate hearings are the worst type of live sessions when Powell is there, because these guys are going to grill jpow. So I feel sorry for him. This is a job review. He's doing his job. He has a responsibility. So listen, and if I hear anything, I'm going to just shout out like, buy, sell now.
99 per gallon. Today it's still $3.19 per gallon. A 50% increase in just a few years. So it's devastating to the average American family, particularly families like the one I grew up in. A single.
You see, what does jpow has to do with the, with gas? Nothing.
Your food up 30%, your cost of keeping your house cool or warm up 25%. It's not a challenge. It's not unfortunate. It's an absolute crisis. And too many households in America today are living paycheck to paycheck, and they fear the challenges that are coming our way, the headwinds brought to us by the Biden administration. Those headwinds, of course, are seen through the prism of inflation. Inflation hasn't been this high since the Jimmy Carter years, and that devastation is being felt and measured in households by too much month at the end of the money. And that devastation is real for the vast majority of Americans. And the pointing finger, I tell you what, whether it's the Biden administration throwing the Fed under the bus or any other way they can deflect from the real problem. I've seen it.
This guy is a potential vice presidential candidate for Trump.
Let's hear what he has to say.
Other than the
I didn't know this.
At 1600 Pennsylvania Avenue. The Progressive wish lists, spending projects, and out-of-control regulations of this administration continues to eat away at American paychecks. And they continue to blame, whether it's shrinkflation.
Well, is he to run for Trump as a vice president? He's not going to be easy on Powell, because obviously Trump wants to sack Powell as soon as possible.
Everyday Americans. The American people see through the facades and they want real solutions. It doesn't take a PhD economist to understand what the average American is experiencing under this administration. When President Biden and my Democratic colleagues pump trillions of dollars into our economy, those dollars increase the demand and pushes prices higher. It's that simple. The American people see and feel it every single time. And they see it, as I said earlier, the grocery stores, the gas stations, at the doctor's office. It's just undeniable the impact that this is happening. Just last week, we celebrated the birth of our country, the birth of this notion of freedom and liberty. But American families got slapped with the most expensive July 4th on record, with a cookout this year costing, on average, 30% more than it did just a few years ago. I call that hogwash.
But it's the same in every single country. You can't blame him.
Economics. Instead of reducing the push for more spending and more regulation, they only simply double down.
Brother, inflation, it's not just caused by monetary policy. Has an effect as well, but it's different supply and demand side shocks.
Of the So it's important to ask, who are
and a lot of corporate
these
gouging.
billions of dollars of forgiveness actually
Yeah,
benefiting?
this is why I hate that. This is political agenda. The reason why the Federal Reserve or central banks are separate or technically independent from the government, because these guys are elected for 4 years, but monetary policy is set for decades. They're controlling the money supply not because they some kind of Superman, but if these guys get hold of the money, they would spend everything and cause hyperinflation. I guarantee that. This is why the central banks are independent technically in most countries, apart from North Korea, Turkey. So these guys they should have nothing to do. They have the fiscal policy, spend their money, but monetary policy is a different type of business. This questioning, this testimony is filled with political agenda, and this is why I hate it.
Billion and 1.4
Anyway, looking at the
$1
positions,
so why do I have to
still
even ask the question?
in
Why do we
the
continue
long
to
position,
punish
but
American
price hasn't
families
moved too much.
struggling paycheck to paycheck with a new scheme to relieve households over $300,000 of student loan debt?
Many of these
Well, the answer
politicians
is pretty
use
simple.
clips of these
Politics.
hearings to run in their political ads so that they could say, I stood up to Jerome Powell, even though, what they say doesn't make any difference.
Yeah, absolutely. They do all the time.
I think it's past.
But jpow has to do things which are inconvenient. He has to, pull the brakes on an overheated economy, which is caused by irresponsible government spending throughout COVID. Yes, many businesses had to be helped, many households had to be helped. But come on, I show you a chart, Mike. No, actually not. Later, let's listen into the...
Parking more capital on the sidelines through Basel III endgame. That proposal
Thomas,
itself
I think you are a bit
would cost
behind.
millions of Americans process, as this a normal proposal lacks any
Compared to
form
what?
of clear justification. Chairman Powell, it is essential that you, your fellow governors, and the other agencies join in this rulemaking, follow the law, do the homework, and then let the public check the work. And that's why I believe that it is absolutely necessary to have a complete re-proposal of Basel III endgame. Give the stakeholders an opportunity to take a look at it and then recalibrate what is necessary going forward. Any increases in capital that are not quantitatively justified harm the American people who need it most. Our farmers, home buyers, small business owners need and deserve access to credit. Therefore, I'll repeat it one more time. You need to restore confidence in this rulemaking process, pull the existing proposal, and have a complete restart. And then, when the data has been analyzed and is available for the public scrutiny, reissue an appropriate proposed rule following the requirements of the APA. I look forward to your opening statement and having a chance to have a conversation afterwards.
Thanks, Senator Scott.
It's a nice speech. I like him.
Today, please proceed.
Chairman Brown, Ranking Member Scott, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Fed's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following
deflationary, that's good.
in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggest that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still still at a low level of 4.1% in June. Payroll gains averaged 222,000 per month in the first half of the year.
These are what he's saying about the economy. These are like, he speaks in a way that's showing that there are cracks in the economy, unemployment increasing, labor market weakening, which is deflationary.
Workers in their prime working years, and a strong pace of immigration. As a result, the jobs-to-workers gap is well down from its peak and now stands just a bit above its 2019 pre-pandemic level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We've also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. A restrictive monetary policy stance is helping to bring demand and supply conditions into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%.
Meeting by meeting based on data.
Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Federal Reserve with operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Mr. Chair. And the senior member of the committee will begin the questioning. Senator Reid.
Thank you very much, Mr. Chairman. Former President Trump has indicated that he would propose, if elected, a substantial increase in tariffs of between 10 and 60%, and by doing thus, eliminate the federal income tax. First, on the question of what would be the impact of tariff increases on prices, consumers, and the economy?
Thank you, Senator Reid. So I'm going to say that we go very far out of our way not to comment on campaign-type information. We just don't do that. We also don't comment on trade policy. We have really specific and important jobs, and we try to stick to those.
Well, I'm glad I allowed you to establish that principle up front, Mr. Chairman. But let me opine a bit. 10% increases in tariffs is going to have an effect on prices in the shop aisle. It's going to increase them because they'll be passed on likely. 60% tariff increases are significant. And in fact, I've been told that to replace the income tax, you would have to raise tariffs across the board 70% to make up for the loss of the income tax, which would, I think, create huge economic problems. I respect your impartiality and your neutrality, but the numbers don't seem to add up to anything that would help the country. Let me switch to something else that might be more within your line of response. You said in your opening statement that labor markets appear to be in a better balance. And that's one of the key factors to judge whether interest rates can be raised. I must say I'm concerned a bit that we're not on a very faster track to decreasing interest rates from the Fed, and because of the better balance you cite. Could you comment on that, Mr. Chairman?
Sure. So the most recent labor market data do send, to your point, a pretty clear signal that labor market conditions have cooled considerably compared to where they were 2 years ago. This is no longer an overheated economy. This is an economy, as I mentioned in my opening remarks, that is more or less back by most measures to where it was before the pandemic. And that was a strong labor market, but it was not an overheated labor market. So I think the upshot of that really is that we're well aware that we now face two-sided risks and have for some time. But now, the labor market appears to be fully back in balance. We know that if we move too quickly, we risk unnecessarily hampering economic activity and possibly interfering with the ongoing expansion. We know that if we move too slowly, that we may undo the good we've done. Well, actually, it's the other way. If we loosen policy too late or too little, we could hurt economic activity. If we loosen policy too much or too soon, then we could undermine the progress on inflation. So we're very much balancing those two risks, and that's really the essence of what we're thinking about these days.
But the direction seems to be going towards lowering interest rates at some point. We would hope that might be a wish rather than a direction.
I think if you look at the last summary of economic projections, I guess I would say it this way: It doesn't seem likely that the next policy move would be a rate increase. We don't take things like that off the table, but that does not seem the likely direction. The likely direction does seem to be in, as we make more progress in inflation and as the labor market remains strong, we begin to loosen policy at the right moment.
Thank you. Just 2 weeks ago, the Supreme Court handed down 2 decisions that impact every federal regulatory agency, including the Federal Reserve. They overturned the Chevron case, which had eliminated judicial deference to agency decision-making for many, many decades. And they also dramatically extended the statute of limitations under the Administrative Procedure Act.
I love reading the YouTube comments and people just saying like, sell now, buy now, you know, the TPs and targets and everything. But, you know, based on what, guys? Oh, just listen what they have to say. We don't know the outcome, any of this. Looking at the open positions currently, you know, prices back into the range. So the range, let me just show you. I'm going to add an object, which is a shape. So this is the range gold has been moving for a while. Upwards there was a breakout and a retest. And this is what we were afraid of, that the price is going to return into this range. Now, above the range, we have the daily and the weekly pivot, which rejected, price rejected. But so far, there's nothing confirmed. Market sentiment is bullish. Both the buy and sells are valid because both arguments I strongly agree with the sellers, with the buyers, but do not push anyone into buy or sell without giving good reasoning about why do you think it's a buy, why do you think it's a sell. Just because you're drawing trend lines, it doesn't mean the market is going to respect those trend lines. Even though technicals do work as well as fundamentals. If you read or write in a chat, give some reasoning so people can understand and learn. I think that's the best way. And please, thank you.
What position are we in now?
So we're as an institution very focused on reading the actual letter and intent of the law and following it carefully. This is a strong institutional value that we have. Those are brand new decisions that just came down, and we're really in the process of just studying them. I don't have anything for you on them, but we will of course follow the law as the Supreme Court as the Supreme Court has read it, because that's their job.
Well, thank you, and I concur with compliance with the law, but when you do your analysis, and if it is detrimental to your ability to regulate the banking industry in the United States, I think you have an obligation to make that public.
Oh, sorry, Schalke, I just sent you a message by accident.
Senator Scott from South Carolina is recognized.
Thank you, Mr. Chairman.
No problem.
We've heard a steady stream of commentary that there will be changes
Francesca.
to Basel III endgame proposal. That can be seen certainly as good news. Some reports say it could be finalized as soon as August. Others say you are circulating a term sheet for a revised proposal. Through it all, this proposal will have outsized impacts on our banking system from big...
Okay, so it's the banking regulation, which isn't too relevant for us short-term day traders. This is a longer-term development. Current position still running in profit. But all of the entries are running still in profit. We need to get out of this consolidation. As I said, we need Powell to hit a dovish tone. The questions needs to be dumb enough, the market to shake off, this Senate hearing. So then we're good to go to 2400. But if for any reason Powell is going to suddenly, raise his voice or concerns about, interest rates maybe not high enough, or anything hawkish, the market is going to sell off to 2330 back again into the previous consolidation, which was down right here. So seller target 2326, buyer target 2400. This is it.
So you said the seller target again is what?
It
is the previous consolidation right here. If you look in the chart, you see this consolidation right here. If anyone is selling, I think this would be a good target, 2330. it would move like in the same consolidation. I'm on the buy side and I'm targeting 2400. Well, a previous high is the first target, which is around 2388, 2390. That would give, well over 240 pips. So I would definitely take money off the table here. But 2400 is what I'm eyeballing for a few days now. This is why I'm still in the long positions since last week. And the current PNL is £3,000. So, but anything is possible. So, make sure you do your own analysis and enter the trade based on your own will. Do not listen to anyone. Have a strategy. I see more bullishness because of the market sentiment, and I'm on the buy side. Is it reasonable to enter into buy now? Yes. So as a sell, but you have to have your bias correctly. I'm on the buy side.
A study which I will note should have been conducted before.
Yeah, Mr. Scott is still talking about Basel III. Now, if you don't know what Basel III is, it's not compulsory, Basel, but it's an internationally agreed set of risk management standards, or it was a response to the 2007 and 2008 financial crisis, but it's not compulsory, but everyone is afraid of Basel. So Mr. Scott is talking about the implementation of Basel III or some changes, but it's not relevant for us because that is a much longer term project and it has longer term effect on the economy. It's important, but for economists and banking professionals. Looking at the chart right now, price hasn't moved that much because the speech is talking about, the conversation is going on about banking regulation. There was some monetary policy as well. And this is why I said this isn't the sexiest and most exciting hearing in trading.
That's basically the broad strokes.
But maybe we're going to hear something that helps move the market.
How long do you
and it continues tomorrow too, I believe.
Opportunity for public comments?
2 days of public roasting of J. Powell. And don't forget that on Thursday we have CPI. Now, CPI is what everyone is waiting for. The hearing is, it's nice to trade. It isn't the most exciting because of this political agenda, but the CPI is what everyone is waiting on Thursday. Now, if you look at the last CPI, what was last CPI? It was we traded it and CPI decreased. Yeah, I think it was decreased. So it was a nice buy on gold.
Before we do that, there's a lot of work that needs to take place.
52 pips of profit
before you actually
from the last trade.
The revised proposal. Quite a bit of work. So it will take some time, and then we would put it out, and then there would be, I'm just taking that number, 60 days of comment, and then we would get the comments back, and there would be another period of evaluating the comments, and only then would you go final. So there are a number of steps here.
Yeah, thank you. Well, just final point as I'm running out of time here. I think Senator Reid made the comment about the Chevron case and the impact that it could have, certainly curtailing, from my perspective, the regulatory state. The necessity of a cost-benefit analysis on new regulations that will impact the economy, I think, is quite helpful. In the 1,000-plus pages of Basel III, I think there were about 20 pages that reflected some kind of cost-benefit analysis approach. I really hope that we see more of that going forward.
Thank you.
Senator Tester from Montana is recognized.
Well, thank you, Mr. Chairman. Thank you for the courtesy. Chairman Powell, good to see you here today. Appreciate your work. Look, regardless of where I go in the state of Montana, housing is a big issue, whether it's Billings or Butte or Bozeman or Busby or Big Sandy, it doesn't matter. Larger towns to medium-sized towns to small towns, housing is a huge issue. And I think it's a huge issue all over the country, and correct me if I'm not correct in that. And I was wondering how the housing challenges fit into the overall economic picture that you're seeing.
So we do pay a lot of attention, and I would agree with you. We have significant housing issues in the country, and we had them before the pandemic. Certainly, the pandemic has created new distortions, and monetary policy works through interest-sensitive spending. There is no more interest-sensitive spending than buying a house.
Are you
and
streaming
having a mortgage.
CPI?
So
yeah, we can do
sure,
that.
Our
Why
tighter
not?
policy is having an effect on economic activity in the housing sector. But I would also say the best thing we can do for housing is to succeed in getting inflation down to 2% on a sustainable basis so that rates can come down, so that the housing market can get back to what was the pre-pandemic normal, which is to say still a housing shortage, but not dealing with the kinds of specific things we're dealing with now.
So let me drill down a little bit. I'm speaking not necessarily from a housing cost interest, and you're correct on the things you just brought up. I'm speaking more from a standpoint of economic growth, in that there are plenty of small businesses, schools, hospitals, Main Street businesses that can't hire people, they can't expand because there simply is no place for them to live. How does that fit into your economic outlook metrics? Because I think it's, from my perspective at least, I think it's limiting the opportunity for expansion. It's limiting the opportunity for entrepreneurs, business startups. And does that fit into the economic picture that you look at?
So our mandate...
No, we're still ranging for 40 minutes now. If they continue talking about these things, I don't think it's going to move out from the range, which is a bit inconvenient.
Really not so much in the hands of the Fed, they're in the hands of legislatures, state and federal.
Do you believe that if we were to put forth some housing incentives, whatever they may be, that could have if those incentives resulted in more affordable workforce housing on the market, that would have positive impacts on the economy?
These are questions for you, but I would say this, that I'm aware that housing is in short supply, and that for many it's a critical need for the workforce.
Okay.
And so more of it is better. But as to where the fiscal policy how you should prioritize that's not up to us.
Look, I want to talk about the independence of the Fed for a second, because I know that you are a strong supporter of independence, as am I, and political influence I don't think helps with monetary policy in the country, and so give me your perspective at least on why the central bank independence is so critically important.
Thank you. I'd be glad to. So
listen to this.
Essentially, all advanced economies have adopted a policy of central bank and operational independence, and that just means that we make our decisions, we're instructed to make them without taking in extraneous factors, one of which would be politics. And the record is pretty clear that that's a good it's a good institutional arrangement that serves the public well. And we just want to stress, as we do periodically, that this is an institutional choice that we make as a country, and that as long as it's seen to serve the public well, it's a good choice. We think so.
Okay, on advanced economies, there's some that talk about the economy of this country not being in very good shape. From your perspective, tell me how the economy of this country is doing compared to other advanced economies that have central banks.
So I'm in lots and lots of international discussions as part of my job, and the story for the last 2 years has been just how exceptional the performance of the U.S. economy has been, and that's not a secret. Clearly the U.S. economy has performed very well compared to sort of our advanced economy colleagues.
Is there any country in the world with a central bank, any advanced economy that's performing better?
Better as a central bank?
No.
In the meantime, why they having the discussion about central bank independence and why is it important? I'm looking at Nasdaq, which broke 20,000 last week, and I think it can still go higher. What about the US 30? Yeah, I'm gonna enter a NAS trade long on NAS. I'm going to put the stop loss just below the consolidation. The reason why I entered, because do you see this massive wick right here? The last candle, it dipped below the consolidation, so there was like a spooning of stop losses. And what I want to do is I want to move the grid. So I'm long on NASDAQ, and I'm going to move the chart right there. Going to change the color.
I assume we don't see your chart.
Oh, sorry. Yeah, you can choose to see now. So do you see this wick right here? So if I were to draw a barrier to the consolidation, you can see that this outlier right here, this was a dirty move, because everyone was expecting like, oh, that's a good support here, it's going to save us from the stop loss hit. No, it's not. So I entered into a long position, and the target is, it's hard to put a target on it, because we the next target is heaven, because it's a new all-time high every single day for NASDAQ. So NAS trade is on. Gold is still consolidating, so there's not much happening, guys. New York is open, testimony is going. It's a very quiet day. Thursday is going to be the big day.
Risen 41%. Fuel oil prices have risen 37%. Now, I can go on, but you understand what I'm saying is that energy has increased substantially. And I think one of the reasons for this has been additional demand as we've come out of a pandemic. But the other part of this has been whether or not investors really want to go back in and invest in traditional energy resources after the president made the specific determination to cancel the Keystone XL pipeline on the day that he stepped into office. When he did that, he sent one heck of a message to investors about traditional energy and investing in traditional energy in the United States, and the fact that a multi-billion-dollar contract or contract could be canceled with the stroke of a pen. Now, my question to you is, what percent, or has there been a discussion about what percent or what amount of the inflation that we've seen, over 20% increase in terms of affordability for a lot of our products, how much of that is attributable to the demand side, and how much of it really is attributable to supply side challenges that we've seen in this country?
That's a question that we've thought about a lot.
It's a very good question.
Any
as they say,
attempt to reduce that to a precise number would be inappropriate, because it's so uncertain. But I think we can say, I believe strongly, there's a significant demand element and there's a significant supply element. And we've seen the supply side heal so much over the course of the last year or so, and we clearly see that that's contributing to lower inflation. We also see cooling demand, for example, in the labor market. So the two forces are working together. I can't really break it down.
How are you guys enjoying so far the hearing?
It's good.
There are some good questions, especially which Powell can answer about, the supply and demand side effects. It's a very good question. It's a lot. The answer is very depth. So listen.
Almost 50%. The hiring and quit rates are now below pre-pandemic levels.
Oh no, it's Brown again. Oh, Brown again. I'm gonna call it a day soon. I highly recommend, guys, to continue to listen. But there's not much happening in the market right now. This is why we had different type of questions. Prices ranging in the consolidation. So let me show you my open trades. Prices ranging in the consolidation, and none of the questions were strong enough. None of the answers of Powell were strong enough or good enough to push the market in one direction. Both sells and buys have logical and valid arguments, so I completely agree. Whether you buy or sell, there's no need to echo it in the YouTube chat multiple times. Listen into the hearing, and I wish everyone good luck, guys. But there's not much I can do now.
All right, yeah, it looks like it is just going to range here, I guess, unless, he's always trying not to make news, right? Be as boring as possible.
Yeah, there's two ways. If he continues to be neutral, and very risk averse, then the market is going to shake it off, or they're going to eat it and take note. But he's been saying these things for the last 10 months. He hasn't been this detailed in the most recent economic activity. I'm talking about the June data prints, which were quite deflationary. If he carries on to continue talking about that, chances are high the price is going to push higher.
Yeah, I agree. I think the most important thing that he said was that, while he isn't taking a rate hike off the table, it doesn't look very likely, and that the trend is toward lower inflation and therefore lowering interest rates at some point in the near to mid future.
Yeah.
That was the takeaway for me from this.
Exactly. It's a very colorful discussion about the supply and demand side shocks and effects on the economy. So it's difficult sometimes to keep track on which senator asks what, and also they sew in their political agenda. But so far it's a good hearing. It's better than the other ones we tuned into. Tomorrow, I'm not sure is what's going to be. But anyway, I wish you guys good luck. Thursday, CPI day, that's going to be super easy. And let me show you why. So we have this, or I have this CPI chart, which I traded CPI quite a few times, and it's easier to trade. Look at this. Why is it so slow? Oh, there you go. So these CPI data are so much easier to trade. I'm going to send out this chart, so we're going to prepare for this. It's clear data, no code swallow up, no bullshit, just data, so it's easier to trade. Anyway, it's going to be, shall we live trade tomorrow's hearing as well?
So will we?
Shall we trade?
I won't
the
be
hearing
able to attend, but yeah.
Okay. Anyway, good luck, guys. Speak tomorrow.
All right. Thanks, Tomas.
Thanks, Tomas. See you soon.
Thomas.
Bye.
Thank you.
Hey, Francesca.
Hey, I'm back. I was on holiday, so now I'm happy to be here.
Good. I've missed your
Hope you're well.
public chat. Yeah.
Oh,
I would be
thank
better
you.
if the position is running in thousands of pips of profit. Well, it is 780 pips, but what can I do with it? It's not much.
Yeah, that's the market. Gives and takes.
Yeah, absolutely. But so far it's good week. Positions running since last week, and it was like 1,500 pips overall. But now we're just back into this shitty range consolidation. This red bracket. Anyway, speak tomorrow, guys, and good luck. Have a good day.
You. You too.
Bye. Sell. And those of you who would like to join the Alpha community and trade CPI live with me this week, and if you want to see my positions, go to alphafx.eu. But if you go to the the Telegram, you get a bigger discount that you can join the Alpha community. And also, the monthly subscription is back on. It says sold out, but you can click through. So it's been taken off. I was just lazy to change it. Anyway, thank you so much, guys, and see you soon.